What do you think triggered this pullback?
Well, the short answer is I have absolutely no idea. I'm not trying to be flip. You know, the truth is it's always easy to invent these causes. We can talk about seasonality. We can talk about stock splits. I think the simple reality is the market had an enormous run. That run accelerated in August. You had a lot of crowding positions. A lot of that was in option form as retail investors piled into some of the momentum names. That caused its own dislocation. So the short answer is I think the market was likely to pull back off of this overbought condition. The fact that it happened yesterday rather than Tuesday or next week is not obvious, but this was bound to happen given the strength of the run that we'd had.
I'm just looking at some of your top holdings in your fund, Russ. Apple, Amazon, Microsoft, Alphabet. Do you feel a little overexposed here, given the kind of nasty correction we saw it was possible in the last week?
Well, the first thing to say is, again, there's a difference between the absolute holding versus the active holding. So some of those names were overweight, but the reality is they also represent very large holdings within the index. As we've spoken about, I think, in past broadcasts, we've actually been trimming back a little bit. Long term, I still think that many of the names in technology, communications, software, these names have tremendous profitability. They've got earnings consistency. The market likes that. Having said that, we have been trimming back on many of those positions in favor of some of the ones that have not run up as much. Some are in tech like semiconductors. Others are in some of the old economies. We've liked some of the transport names, defense names. We've been adding to our exposure in Europe. So there's nothing wrong with keeping an overweight to tech, but I do think it's been prudent to trim that back given the extent of the run.
Interesting moves you're making. My only other question, Russ, is what do you do to hedge yourself against the risks and uncertainty, whether they're on the economy, on the virus, on the political situation and the election? If you're feeling a little nervous, are treasuries still a good hedge, given that the yields are already at such rock bottom levels?
Yes, Sarah, I think this is an excellent question. In some ways, maybe even more important than why the correction happened yesterday. Treasuries are still a hedge, but I think to the wording of your question, they're not as good of a hedge. And the simple reason, is, as you allude to, is at 70 basis points and the Fed committed to not going negative on yields, there's a limit to how much treasuries are likely to drop, even in days when the market goes down a lot, as we saw yesterday. Gold, we still think there's an argument for gold in the portfolio. Real rates are negative. The dollar's likely to be weaker. But if you look at gold the last 4 or 5 months, it's actually been trading risk on. So this is a bit of a boring answer, but I think it's the only one really left. One of the things you look to is to raise a little bit of cash to dampen some of that equity volatility, particularly coming into the period around election where I think we will see some more vol.